This is Barry Zalma speaking for Claim School Incorporated with another true crime of insurance fraud video entitled The Temptation of Fraud. This one, item number 43 in the series of videos brought from my 54-year career in the insurance industry as both a claims person and as a lawyer representing insurers. Studies show that insurance fraud is most often a crime of opportunity rather than serious planning. These are called soft frauds, although they're the same as any hard fraud. Honest people, when presenting an insurance claim, often have their moral compass point south rather than true north. A person who would walk a mile to return $5 in extra change received from a waitress will add with impunity $5,000 to an insurance claim without a second thought. A lawyer whose word is honored throughout his state will, without compunction, demand payment for pain and suffering when he was rear-ended, even though he resolved all his pain with 2 aspirin. A judge who has been honored by his peers for his sense of justice and fair play will claim the theft of computers he never owned. A housewife and mother who would beat a child's bottom raw for stealing a 50-cent candy bar sees nothing wrong with adding $2,500 to a claim for smoke damage in her kitchen. The Insurance Research Council, the IRC, released a study that shows that 1/3 of all auto accident injury claims involve fraud. About 3% of claims are premeditated criminal acts such as staged accidents, but 10 times that amount, 33%, account for padding by doctors, lawyers, and/or claimants, according to the IRC study. There is a significant variation by state, with my home of California leading the way at approximately 45%. IRC estimated that 90% of auto claims paid included a build-up or opportunistic fraud. The IRC reports that between 17 and 20% of total injury claim payments, meaning that 17 to 20 cents of every dollar of injury claim payment for automobile accidents can be attributed to fraud and/or claim padding. IRC estimated that between $5.2 billion and $6.3 billion is added each year to the bill of the American auto insurance policyholders because of outright fraud and/or injury claim padding. The bulk of these excessive payments, 90%, seem to stem from opportunistic fraud and/or buildup resulting from a real accident, while just 10% result from staged accidents. It is the obligation of those of us who deal every day with people who buy insurance to explain to them, as we paraphrase Pogo, quote, "We have met the enemy of insurance fraud, and it is us," close quote. Some of the key objective factors associated with the appearance of fraud and/or buildup in injury claims, according to the study, included sprain and strain injuries, attorneys hired in connection with the claim, moderate medical wage and other losses between $2,000 and $15,000, no disability associated with the injury, or high numbers of visits to medical professionals that don't seem to comport with the injuries claimed. Several trends in behavior of those making claims have been documented in recent IRC reports. More people involved in auto accidents are making claims for injuries, although accident rates seem to be declining. Many of these additional injury claims are for relatively minor injuries such as sprains or strains. I had this need to build up a claim come to my attention recently while serving as an arbitrator for the Los Angeles Superior Court, a service provided pro bono by members of the bar to help reduce the Superior Court's massive caseload. The plaintiff, a veteran, claimed he was injured when, as a pedestrian, his foot was run over by a car. The defendant, a lawyer, admitted that while he stopped at a red light, he let his foot off his brake and was about to make a right turn when he heard the sound of the plaintiff pounding on his fender. He put the car in park and ran out to investigate. He found the plaintiff standing by his car with his foot pinned under the right front tire. The defendant immediately got back in his car, rolled the car off of the plaintiff's foot. There was neither a bruise nor cut on the foot. After x-rays were taken, there was no evidence of injury, no broken bones, not even a bruise. Plaintiff, who had just settled a claim for a previous auto accident and had been discharged from treatment the day of the accident with the lawyer, returned to the same clinic that had treated him previously and received more than $3,000 in physical therapy and other medical treatment. The physicians, the same clinic that had treated and discharged him the day before, reported no previous history of injury. The treatment consisted of heat and mechanical massage. The testimony of the plaintiff was incredible. Had not the defendant admitted he had run over the plaintiff's foot and had not seen the plaintiff until he heard a pounding on his fender, I would have given an award for the defendant. I did not believe any of plaintiff's testimony, and I was certain he had built up his claimed injury. In fact, it appeared from his testimony that the plaintiff stood on the corner, waited for a valuable vehicle to pull up and stop, and shoved his foot under the wheel to create an accident. I had no choice, because of the admission, but to give an award for the plaintiff, but I was not required to give him a great deal of money. I gave him what I believed was his true damage from the accident, $1. I am sure his lawyer filed a petition for a trial de novo, a new trial, and will someday get his chance to convince a judge or a jury that the plaintiff was really injured. Hopefully, the trier of fact will get the opportunity to see my award and the reasoning behind it. I often ask myself, why do normally honest people do what the plaintiff did? The insurance industry makes it so easy to make money from a small fraud. The plaintiff knew how easy it was. He had just collected, and he wanted more. Insurance fraud is easier than working, and often more profitable. The fraud division of the California Department of Insurance and the industry itself have been fighting the rings and professional claimants with vigor. They have ignored, because there is little profit or publicity value in it, the small frauds like the plaintiff in the case I described. They go unpunished and often succeed because the government, the prosecutors, and the insurers consider that to be a soft fraud, one that should be allowed. The IRC report makes it clear that the professional criminals are 10% of the crime of insurance fraud. These professionals should be prosecuted. Only an insurance industry noted for its short-sighted search for instant gratification would put all its fraud-fighting dollars against 10% of the problem and none of its fraud-fighting dollars against 90% of the problem. Insurers need a long-term anti-fraud program that goes against the real problem, the opportunist. The honest person must be educated, by punishment if required, that insurance fraud is the same as theft, burglary, or armed robbery. People who build up a claim or otherwise defraud an insurer are as much a criminal as the person who robs a bank with a gun. Funds that have been cut from insurance claims training must be restored. Investigative efforts must be accelerated. Claims handlers must be encouraged to refer claims to their special investigative units rather than to close as many files as possible. And prosecutors and police agencies must be ready, willing, and able to arrest and prosecute the opportunistic frauds, or it will continue and insurance prices will grow logarithmically. This video was adapted from my book, Insurance Fraud Costs Everyone, which is available from Amazon.com as a Kindle book and a paperback, and helps to understand the detail in my 2-volume work, Insurance Fraud Second Edition, which books are now available as Kindle books, paperbacks, and hardcovers from Amazon.com. Thank you for your attention.